Welcome to our BURSA Malaysia webinar. For our webinar today, we are going to be talking about technology-aided stock trading. And your speaker will be CC Young, and I'm Smita, your moderator for today. Before we begin, we'll just go to the disclaimer first. So this webinar is purely educational, and it's only to educate you. So in no way that the speaker of Bursa Malaysia is giving you any buy or sell calls to any of the stocks that will be mentioned. Okay, so for our speaker today is Mr. CC Yong. So CC is a full-time trader who's also a local participant of Bursa Malaysia Derivatives. He is the founder of Straits Index Malaysia Sdn Bhd and a proprietary trading company and associate participant of Bursa Malaysia Derivatives. So CC, I will hand over the presentation to you right now.
Okay, thanks, Smita.
Just 1 minute, okay. Okay.
Okay, so is my screen okay now?
Yeah, it's okay.
All right. Okay, good evening, everybody. So thanks, Smita, for the introduction.
Welcome.
Today we're going to talk about this technology filtering, which help how to trade stocks. This is what I've been doing for the past probably 20 years. So I will have some ways to actually to do the filtering because, as you know, nowadays there are thousands of stocks actually available listed, and in order to actually pick a stock to trade or to invest, it's actually quite challenging. So if not confusing, okay. So that's why we somehow we need technology to be at our side. I remember like 20 over years ago when I started doing all this technology to help us to do the trading and investment. So I remember that time we are using dial-up modem. That means we use a phone line, telephone, to dial up to a modem. To the time was jarring, which takes the speed was, we are talking about 32K, which is 0.0032 meg nowadays, and nowadays we talk about 100 of megs. So that's why we need this technology to help us to really think of a way to invest, slightly simpler but still effective. Okay, so the strategy is actually can be very simple, but a useful filtering method actually can help you to detect the movers. For example, what is the stocks that moves today, and we also actually can often to catch up, some team play for whatever currently the managers, the fund managers, the funds, the retailers, and whatever happens in the market, whether the ringgit was devalued. So that's why it's actually good for the exports counter. So yeah, for example, this is one of the sample that I can show to you. Like some of the counters was detected, that moves today. So this is the small list that I detect. Well, I'll share it to you just a bit. Okay. Now, before that, we move on to start to think of the software. As you all know, actually, you need some software, especially those are freely available. But there are limited free software in the market, but there are actually free software which is actually good for you to start up with. In fact, Bursa Malaysia has got their own website which has this kind of tools as well. But before I go into the Bursa marketplace, so I will also introduce a software called Ninja Trader. I've been using this to trade the instrument that I'm trading. It's also good for everybody to start up with learning this. So today I'm actually trying to build a small, simple system, but without you know any programming. So, and then this is a very good software which you can go to their website and start download now. And it's actually offer free unless you want to trade and own the platform, but at least it's a good tool. So for example, if you have this software installed, they have some free data for you to test out also. Okay, so for the method to do filtering and all this, they call strategy. So first you create a strategy. This software allow you to use just the mouse to point and click and then key in some numbers, and you can have the strategy created and test out. So this is a good platform to start, because otherwise, if you have been learning from the web, you'll be hearing people using programming language like Python, which is used in AI and algorithmic trading, but this software require you to have quite a number of programming skill before you can start off with. So I would recommend to learn up all, but this is a good software to start just with a few simple steps. Of course, you can actually watch the records, to follow the guide step by step. So first thing first is you create some user-defined input for your strategy. So in this case, I'll pick a few parameters for it. You don't have to be, you have everything, okay? Actually, you can have everything default but I just show you the steps you need, okay, in order to create customized parameters. Here, I will use a stochastic to create a simple strategy. So the first part will be I'm actually using stochastic, okay, over here, okay. You have the K, percent K, the KD line, and the slow KD. I'm using a slow KD, and I also actually define the buy and sell levels, okay, and the target profit percent, okay, which I will set it later. I'll show it to you. And trailing stop, that means how much money that you when you actually in the money, then how much money you lose, then you need to stop your position, and also a stop loss just in case the market doesn't go our way. So with this defined, don't be alarmed. You don't really need all this, but just a guide to start, okay. And then you go into a condition builder. Okay, why I need to explain this? The reason is because there's number of ways to do filtering, but this is actually one part which normally we can start with technical, because later on I'll show it to you actually how you can actually detect a lot of movers and all this. So this makes trading become simpler, but of course trading and make a living is actually not so straightforward, but requires some learning curve. In fact, I can actually share with you, I myself trading for a living, so sometimes you can actually have a very simple strategy, but the most important part will be how you implement this strategy. And actually humans are not very good actually in terms of trade something that even if we created it, but we tend to not follow all the rules, all the predefined method that we actually ask us to do. We often actually don't follow our own instruction. So that is the part that make it very hard actually. The personality of a trader is actually also very important. But in order to achieve that, I believe, because I have gone through all this, you need a good system that created either by yourself or you copy, or you will do whatever you can to have a strategy in your mind, and you test it by backtest it using computer, and also probably a forward test or paper trade, or even use a real money but in a very small position to trade certain thing, okay, instrument, stocks, futures, and then you start realize what is those things that important to you, and you start to collecting all this data and also the statistic, how well you perform in the testing. You perform very well, whether in real time or also real life also you perform well, and then jot down what are the mistakes. For one, trading and make mistakes is actually quite common. So if you do make some mistake, don't blame yourself, because I gone through numerous mistakes before I start to forget when was my last time I made mistakes. So it is a long process. So sometimes do not be too eager to make it. Like I say, I want to be a full-time trader in 1, 2 months, 3 months, 1 year. Probably it take longer time than you thought. So please be patient. So in this slide, I'm actually using a stochastic so that I have to define a stochastic, okay, here, and then call up all these are the standard parameters, and then I refer them to the custom parameters which I defined in the previous screen. So all this, okay, will be put in here, okay, and then I will define a user buy signal. That means when this condition is met, cross above, okay, I will define a buy signal. So how to define a buy signal? So you enter a long position. So it's a universal term. A long is actually also refer to a buy. A short will be referring to a sell. So in this case, you can that means this software is actually enabling you not only to trade stocks, but you can actually trade any other instrument as well. So that's a good thing about it. But of course, for now, we put a signal called buy, so it's quite intuitive and easier to understand. So once you define all these conditions, you have the parameter defined. You see, so far all you need to do is just using your mouse click, point and click. Of course, I'm just giving you a general guide. Of course, you need to familiarize with the software, where to click the button and so on and so forth lah. So, but I think nowadays internet is so useful. You can learn a lot of things from internet. So you can look up there, but I'm just telling you a simple strategy that you can start off with. So you see, this software is actually so intuitive. When the following conditions are true, that means the stochastic cross above, enter a long position, which is the signal that I define is actually buy. Okay, so once you actually have this condition, so you can move on to the next step. So all you need to do is actually starting with next, click next, and click next lah. Okay, and then from here, because I define a buy signal, because in trading stock, in this case, I only actually shows you the example just to buy instead of you can short sell first. Okay, so but of course you can actually define such a strategy for yourself as well. Now, and then I define 3 more steps, which you don't really need this as well. You can actually stick just with one signal and trade. Okay, but in this case, I'll show you. You can also set the profit target here. Okay, just add the parameter, and then you have all these stop loss and tiering stop. By right, all these things you need to actually encode it using code, but this software actually allows you to learn up. Okay, probably to help you to understand whether you can actually start doing something similar, the strategy, and if you have the interest, you can actually build up from here. Okay, but if you feel like I don't want to define a strategy myself, you can actually download any strategy available by the community, and they will actually more than happy to share to you, and you can use this parameter to do the filtering, because sometimes you don't need a perfect strategy. I'll explain a bit also, because perfect strategy doesn't exist, so don't look for one. So sometimes you just need a filtering tools that helps you to identify certain movers, and then you can have your own opinion on the stocks and to determine whether you want to buy or not to buy this. So of course, as I said, you actually need to do coding. Like example, this is the actual code in this strategy. These are the coding, and of course, if you're not familiar with programming, it looks alien to you.
Yeah.
But all these are actually quite intuitive, because it's set profit target, which is exactly the code that we define over here. But just that instead of you code it yourself, it was actually defined from the point and click screen. Now, if you don't go to this coding screen, it's actually total fried, because this software, all these codes here are all coded by the software which we point and click just now. So I don't have to key in this code, and they will compile and run this software. This program, actually this is a program, a full-fledged program. We call this language called C#. So this program, you don't have to code it. It's already coded for you by this software. So this is why I think it's very good software to start with, learning, how to use computer or the technology to help you in trading or investing stocks. Okay, and then you can run the backtest. Okay, basically, most of the trading, filtering or computer-aided technology, you start with backtest. So to test an idea, whether it's actually worth to explore even more. Because sometimes you test an idea, or someone tells you, oh, you can use stochastic to trade stocks. So, and don't believe just blindly, because this is actually dangerous. What you can do is actually pick the idea and then go home to just do a simple test whether it works or not. If it doesn't work at all, so that means sometimes you don't have to really waste your time on it. But you see, this strategy that I'm showing to you uses just very simple so-called method. Stochastics, okay, is an oscillator. We have actually talked about oscillator actually last year. So it actually gives you an option to invest and trade and make money, because over here you can see overall the strategy actually did make money, okay, for this particular counter, and the cross loss is actually quite small compared to how much you make. So it's almost like 10-1 kind of thing. So your profit factor is actually 10. So it's actually a good strategy, but it may or may not be suitable at all to your trading, but actually worth to explore more already, because you know your winning ratio and all this. You don't have to go through and calculate it, using your eye, your hands, So these are all calculated on the fly. It takes like seconds to get this calculated. I can show you the actual screen, how long it calculates, for example, later. And then it actually shows it to you, because we're so used to visual. So we need to look at something to actually visualize how this thing executed. Okay, so you see this example, okay, the same stock here. So it initiate a buy signal because of this condition, all right, but it end up you cut loss, because the red usually is cut loss, because this condition asks you to cut loss. So actually you make a loss, and then you re-enter in the new position again and you cut loss. Okay, bear in mind, algorithmic trading system or any computer trading system, you bound to have some cut losses. The reason is because most of this kind of trading, unless you are actually go to small intraday trading type of strategy, otherwise most trading strategy that will be developed are usually a swing or trend trading. So you see, the third trade is actually you catch the ball. So this time it went up from here almost to the top, and this triggering a signal asking you to sell this particular counter, okay, because the profit target has met. Okay, how to get this profit target? The profit target can be actually tested using this strategy. That means you see, not only that you can pick when to enter and exit, you can also test the system whether, let's say I'm using a stochastic, so should I actually exit a profit at 10% of the entry price, or 20% or 30%? So the system actually can tell you, you just put in a parameter, or you ask the system to automatically tell you when is the best exit strategy. That means it's whether profit 10% or profit 5% or even 30%. So in this case, it tells you this is a price that you target, and you should actually exit probably 20% from the entry price. And you did, and you make the money. You almost sell at the peak, And of course, don't be spoiled that every time you need to catch a bottom and exit at the high. Okay, this is actually not the entire reason why you need to do this, but in this particular example, it just catch the bottom and the peak, which you shouldn't take it for granted. Okay, so yeah, then you can test the whole strategy on a lot of counters, a basket of counters, or the whole market, in Bursa, Malaysia. So you just test it and see which counter is actually give you the buy and sell signal, and whether this buy and sell signal will works over time, and whether this strategy will be suitable for you as well. So Then from there, you will have the result of a strategy that you tested, whether you like it or whether you can actually forward test it. That means you test for next 3 months whether it's really make money using paper trading, or you put up a very small account and stocks, that number of stocks that you buy, just to test out the idea. So this is how something is created. And there's many good systems actually created this way. And sometimes you only need a very simple strategy just to help you to kickstart. And once you have the feeling how this thing can be done, probably you can do something even better, or simplify this whole thing. And often you don't need a lot of strategy or indicator to trading and make some money. Next, actually, I'm going to show you a strategy also. Okay, but this time is even simpler than the previous one. The previous one using one indicator. Okay, so the next next strategy that I'm going to share with you, we don't use indicator, we just use a price. And sometimes don't use a lot of indicators is actually important, because the more indicator you use, actually the result can be very good, but you cannot duplicate this kind of result in real life. So that is a problem if you use too many indicator. So generally, stocks or securities that break 20 bar new high, for myself, I consider a potential trend starting kind of strategy. So this, you never catch a bottom because you're actually breaking 20 bar new high. So that means if the price is higher than or has been touching the 20-day new high level, then you actually should consider or should actually alert this stock can be a potential mover. And the example I'm going to show it to you, I'm using this method to filter stock. So it's totally different, and this is the only way how I filter stocks. So I don't need to use so many indicators. I'm just using a price, and the computer can very quickly scan through and give me this kind of result. So because 20 bar new high, I'm sure this is the easiest way. Any system, any software, any platform that you're using, I'm sure they can actually give you the same result as well, so that you can actually strategize yourself to filter this stock and see whether it actually works for you, because it works for me. And for example, this particular day, I'm just using a 20 bar new high kind of strategy, and I picked quite a number of stocks, and this is one of the stock that I picked the other day. The reason is because this counter has been breaking 20 bar, because this has been breaking or has been touching the 20 days new high. So it gave me a signal. So of course, and this kind of strategy usually at least allow me to know what is actually going on, or something is actually happening in the stocks, because there's a lot of buy interest. That's why the price is actually higher. And then you can see that after the signal was triggered, eventually the price actually also went higher, not immediately. So as I said, it's actually not immediate, but at least it actually gives you some insight. So the counter actually potentially move higher, but it doesn't mean that you need to immediately buy it. Sometimes you can actually bid at a better price to get a better feel. But this is a strategy which allow you to pick stocks that in the market, okay, or potentially a team play in the market, which shows to you what is actually traded actively. Because unless you are probably an experienced trader, or you have been reading the news every day, otherwise you wouldn't know what kind of stock is actually will be active today. But using this method, you can. So for example, this is what happened today. I'm going to show it to you what was filtered today. So this is the list. This is the list that which filtered by today. So it will shows you, let's say this is today's, as of today's, it shows you to you like Carex and this counter that they are actually either from sideways or has been going up for a while. And the most important thing is they are actually breaking 20 bar new high, and this way you actually can see a lot of counters are actually moving because of certain team play. For example, at the screen here, you can see that a lot of counters are related to either telecom, TM, or Axiata, or they are Tenaga related. There's no other counters that in same team but except this. So it's actually roughly give you some idea what this thing can do. So yeah, we will explain a bit more how to enhance this. Is actually filtering all these stocks are still not perfect. You need slightly more strategy, okay, in order to allow you to buy a stock confidently. Of course, the strategy is actually quite, need some experience on this, but you need to have a path to pick this up, okay? So usually, the way I approach the stock is actually I need a mover, a stock that have interest by many people. I don't want to invest a stock that's so quiet that I keep on accumulating unless you have the capital. Okay, I want to have stock that has been some interest by most of the investor outside. So, but I also need to improve the winning ratio or rate of the trading signal. So at least I don't go in blindly. It filter like hundreds of stocks. So should I go in 100 or 50 stocks, or should I go in just the stock that meet my criteria? So what I do is actually after using a technical part, I'm using a fundamental to just help me to shortlist certain stock that I may be safer for me to invest. Okay, so here I'm using a fundamental elements here. Okay, and the simplest thing is actually you don't have to understand so many things about the account and all this. I'm just using merely a financial ratio to filter the stocks. So you can log into Bursa Marketplace. Okay, they have this kind of tools built for you already. So for example, what you can do is actually go to screener. Okay, there's a screener in Bursa Marketplace as well. But in this case, actually we screen there are fundamental ratio or financial ratio. So in this case, we will use the PE, the price to book, and earning per share growth. Okay, so I pick up certain signal from here. Let's say, for example, PE ratio, I need something that 10 to 15. Okay, and then price to book is actually, actually below 2. Okay, and earning growth, I need something that growing. That means the stock is actually making some money every quarter. So the earning per share should be growing. So with these elements selected, so I'm able to filter certain stocks that meets my criteria. In this case, it's actually I pick up 75 stocks. You see, Bursa website actually shows you all these things, and the good thing is actually it's available freely to everybody. Okay, and then from here, you can actually see the stocks, and also the stock has been remarked by analysts, whether it's outperform or holding the stock and so on and so forth. So these counters, okay, meet all the criteria that we set. Okay, and then if you cross with whatever counter that we just pick up from the breaking 20 bar new bar, or from here you can refer to your chart if the counter is actually moving for the recent past few days or today. So these are the counters probably you need to take a look into it. So either it's break 20 bar new high or meet the criteria that we just set just now. All right, and this will give you a good combination of stocks that if you're not the type that go out and ask around or read the newspaper every day, this is probably the best way for you to know what is the potential stocks to invest. Okay, so this is the method that I've been using and practicing, and one could also use computer to filter the movers, further with the financial result, which we just showed to you. You can use the marketplace, or you can also use some other software to do it, and then you can actually invest according to the position sizing needed. So position sizing is the next important thing over here. So in my case, I'll use software that actually give you the same type of result, the P ratio, the price to book ratio, and all this. For example, the previous one don't have growth, but this one has got meeting all the criteria, but plus it has got earning growth. So whether this is a better buy or not, you have to make the judge and call. And once you have the experience on this kind of trading strategy, then you will actually able to make a call. But of course, usually it's not so easy because you see sometimes the counter has got negative growth, but this counter actually, if you invest and make money, so how to justify how to actually handle this kind of situation? You need to have that kind of experience, which you will develop over time. But the next thing that more important, in order to avoid you whether you dare to go into one counter or not, is actually we call position sizing. But first, let me finish. So this the reason why you can filter a stock that potentially you buy or potentially you do not want to buy. Now, using system trading, okay, it has got the benefits because you can filter thousands of stocks, just with seconds. But it's also actually has got a lot of traps. A lot of people has been trying trading system, but you might not actually get the result you wanted. The reason is because there are so many traps there. First, there will be collinear effects. That means you look at all the counters and you see a lot of indicators give you different signals, and you try to get all these signals to give you a better picture. But actually you fall in the traps that collinear effect, which all the indicators are almost roughly giving you the same stories. But if you overuse all these indicators, then you will be actually trapped yourself to be unwanted loop of testing, which the result is actually too artificial. Second, you'll be actually there are more traps, but these are important. Confirmation bias. You will always think of something that you see is what is actually happens, but most of the time, things that you see it may be tricked by your mind. It may not be actually what really happened. That means that you can see people selling the stocks. Okay, you start feeling like a lot of people selling, so should I sell the stock as well? But actually, you're trying to define this out of your own mind, because of the position they're holding is actually give you the hope. Let's say you have a losing position. When you see people buy, you say, oh, there are people buying, but actually it's not. Probably there are more selling force than the buying force, but you always tell yourself what to look at. So this is confirmation bias, which you should avoid actually. And over-optimize. Over-optimize is over the time, you may actually put in too many indicators into your trading strategy, which you actually over-optimize the strategy. It looks perfect from computer, from the Excel, from whatever tests you may have, but at the end you actually don't make money in the system because you over-optimize it. It looks so perfect in the paper, but you cannot put it into real life. In real life, actually, you shouldn't get a perfect strategy to roll out, but it should work in certain way. You need to really like test it out, then you know what I'm saying. But please try not to look for the perfect system. A simple system can still make money if you actually have the risk control, the money management, and so on and so forth. And the last, actually, but not least, is curve fitting. Curve fitting is actually you try to over-optimize a system, and then you try to imagine what happens in the past will exactly happens like the order that you have been going through before. So that is actually wrong. History can repeat, but the order, the 100% of the detail may not be the same. So you need your strategy to be so flexible, which you need to run, let's say, Monte Carlo test, just to stress test to make sure the system, in the worst case scenario, you still make money. So you need to go through all this process. Otherwise, you'll be end up like you may be actually making money probably for the first 1 to 5 years, but at the end it doesn't work anymore. So you have to be careful. Do not over curve it. any system is actually curve fit, but do not overdo it. So yeah, then why we actually so-called why we actually do the backtest or computerized backtest, because we want to take the confirmation bias away from us, and because you cannot lie to yourself, because once it shows in the screen it doesn't make money, so it doesn't make money, so you can't do anything to make it make money, because you are programmed and passive. The program won't listen, the program don't have confirmation bias, it sees the things that it's supposed to see, not because of what they have in their mind, and statistically represent the system or strategy. So you can see that how many percent that you can expect from this system, whether to make money or to lose money. So this is also important, because this will actually give you the confidence to execute or not to execute at all, on certain buy and sell signal. And after all these tests, okay, you can start testing and create rules to be executed. You see, sometimes you see the signals that you want to buy, but there are some conditions have to be met, because let's say, for example, how much percent of the money that you can utilize in every single trade, and these are the things that you need to set the rules to yourself, because over the time, if you create rules and you realize that rules that you don't follow, it hurts you, when it does matter. So you need to define some rules, when to execute, when not to execute, or in what condition it can be implemented. And then I move on to a very important thing that most of the people will be overlooking, because they will think that algo trading system is actually, when you look at movies, people are telling you a lot of people trading high frequency, and yes, it's true, but high frequency has got a different strategy, which usually they will look for something called arbitraging opportunity. That means you buy and sell at the same price, but you may actually make money over different market. This we call arbitraging or spread trading. So in order for you to really understand whether to make money or not, you need to have money and the risk management system in place, no matter you're trading high frequency, high volume, or swing trading or trend trading. So you having a good trading signal itself is actually not 100% complete system. The center of all successful trading is actually money and risk management. And in my opinion, it's actually most of traders fail at this part. Okay, so that's why I want you to look at here, because this is what trading is actually all about. If you have a good trading system, without this, it won't work. You can have a good system, then you go in all into one counter, and this counter make money. You think that this is how trading is all about, but it's actually not true. So a very simple trading risk management system is actually 1%, and this is what I'm actually using. Okay, and I think it's very useful, and you should actually try it. It's simple. Risk 1% means you don't in your trading don't lose more than 1% of your money that you in your account, and if you lose, try to limit at 1%. Okay, that means 100,000, you're not going to lose more than 1,000 from your account. If you lose more than that, then you just cut loss, or you hedge your position. So hedging is actually totally a different topic, but you can actually hedge. For example, if you're trading mid-cap stock, you can hedge by selling FM70, the futures index in BMD. If you're trading blue chip stocks, you can actually hedge by selling FKI, also available in BMD. So there are actually hedgings. In fact, you can do short sale intraday, but yeah, that is actually totally a different topic again. So for example, what is actually risking 1% is if you have an account, the equity is 100,000. So you buy a stock price at 1 ringgit, let's say, for example. With 100,000 of cash means you are all into this counter, and your return is totally reliant on this stock. So there are people actually probably think of this, and you are investing in this company. But for trading, you can actually do a different manner. So first, how to do it is you set your maximum loss that you're willing to take. You set a cut loss level that you analysis or your backtest, let's say 10% of the entry price, you want to cut loss. Let's say you buy counter 1 ringgit, then you cut loss at 90 cents. So you can actually define these kind of rules into your trading. So you calculate the position sizings by using this kind of method. It means each trade how much equity that you can put into risk. That means how much money you need to risk, or how much money that you're willing to lose. Okay, so you can put in an Excel. Very simple Excel will do. Say for example, if you're using a fixed percentage, which is 1%, so this is 1% risk. If your stop loss is actually 8%, this one you can actually get from your backtest. Remember, you can optimize and get this, or just give and take 10%, 8%, 5%. You make a call. So by the right, if you have this two defined, if the share price they're going to buy is actually 2 ringgit, okay, your position sizings for this particular trade, if you don't want to lose more than 1,000 or 1%, is 12,500 ringgit. So the share that you can buy is actually 6,250 lots or shares. Okay, you need to round to your numbers. Okay, and your stop loss price is actually calculated at, these two are calculated, number of shares and also your stop loss price. So your capital balance is 87,000. You see, when you go into one particular counter, your maximum loss will always fix to 1,000 if you cut loss at 1 ringgit and 84 cents. So this is all about, and this is so important. You need to practice this all the time, right? So once you have this, actually, I would say you can use a very simple strategy, because there's no complex strategy that really works 100% all the time. So you can have a simple strategy and a complex system. So maybe the result come out probably not much different. But this risk management will make a result different from one trader to another. And in order for you to illustrate how important the different position sizing affect the result of the same strategy, I've been using this slide for probably many years. So it looks a bit small, I know, but this is really good way to show it to you. I actually backtested this. Okay, let's say if I go into a position using the same strategy, okay, I calculated using a computer using this strategy. If I go in 15% of my capital, and then my profit is actually 3,000 ringgit in this case, okay, fine. So you get your strategy, and I think one of the picture has mixed out. So by right, the performance, the picture, I don't know where it's gone. The performance should be something like, a small equity curve that go up, okay? But if I'm using a different capital, that means every time I go into this trading, I'm using 50% of my capital. So notice that my performance actually lessened. Just now we're making 3,000, but I after using 50% of the capital, using 15%, actually you make 3,000 end of this period. But using 50%, but you're making half only. So this is weird, right? So you're making 1,007 only. And you look at the equity curve, this is because your equity curve, actually you make money, but you also lose money, but in a big way. And when you make back, yeah, by end of this period, you may say that I make more money during this period of time, but trading is not about one day. So if you make money 1 year, you lose in 1 month, then you make money back. So you're making, let's say you have 100,000, and you lost 50% of your money, so which you have only left 50,000, and you're holding the stock. The next year, the 50,000 became 100,000 again because you're holding it. So can you say that you make 100% because you're holding 50% worth of stocks, and the stock actually become 100,000? Can you declare you're making 100% in your investment? No, because your total net investment is actually from 100,000 to 100,000 after 2 years. So you're actually making 0%. But 0%, if you measure it from the lowest point, of course you get 100%, but we don't measure this way. We measure from the highest point to lowest point to get the maximum drawdown, but we never measure this is the maximum growth because this is the wrong way of defining it. Now, what about if I use 100%? That means I go into one counter all in, okay, with all the money that I have, okay. And shocking is the result is actually negative. And actually, I'm not surprised also because this is why a lot of traders end up really not so positive in the account because you're going into a wrong size for your account. So now this is the equity curve. That means you have a very choppy trading result, but you suffer big losses and then you recover slower. Why you lose big? Because you're going all in. But why the recovery not in the same manner? Because the moment that you have this kind of drawdowns, your equity becomes smaller. The chance of actually making money is actually smaller because you have a smaller capital from the starting. So this is why you need to control your capital at all costs. It's quite important, and this is how will help you in long run. So you can do it manually with Excel. Okay, you can apply capital, risk tolerance, maximum loss, and stop loss, and you put into a figure just like what I posted to you before. And with this, I think you can actually get a very good picture how to start trading. If you have problem how to set up the formula probably, what you can do just use your computer to search up person sizing topic because I'm sure there are a lot of freely available formula in place so that you can actually have a look at these formulas and they could actually potentially give you quite a number of example on how to do it. So building a strategy may not be a very complex thing because I have been using strategy that I'm built with Excel, some simple programming. First, the benefit is actually I know quite a bit of programming. That's why I can come up with a complex strategy. But I have gone through this and I can tell you, you don't need to be so complex in your trading strategy. All you need to be taken care is the risk and money management system. You need a system that can give you a positive result over the long term. That is all. And one good trade or a good day, even a month doesn't count because that's why you do need a perfect one because you do need a perfect trade every day. So once you have a robust system, practice it by following all the rules defined. How you define the rules actually slightly to say you need to start trading it and lose some money, and most likely that is how you actually have a very good and clear command over how to define rules. And for stocks, combining financial result usually give a much better result. So why the financial result is actually important because financial ratios, which is in positive, usually indicate the company is more or less financially sound in terms of the fundamentals. So usually these are the counters will give you a better chance. Let's say if the market is actually not performing very well, but this particular stock may not be. It can be defensive stock, when the market is actually in turbulence, and this is how things can be defined in your strategy, and this is what helps you in long term. So I'm also want to share to you another strategy which we may not have time to explain everything. Okay, this strategy, the screen maybe looks very small because usually this kind of thing is actually quite demanding. So all the fonts are small. They have so many parameters, and so you see, in this case I just select on the left hand side corner stocks, okay, and then I'm selecting one of the strategy. I have so many strategy. In fact, the built-in strategy is actually quite good as well. I'm just using a very simple strategy, and the strategy is using MACD with EMA 12 and 26. I'm sure everybody has MACD in your platform or system that you're using. and the stop loss is actually 10%, and target profit is 20%. 13% is actually 5. That means I'm defining myself. I don't even use optimized software to get this. I'm just putting it figures and to test a few years, and then you see I click the run. Okay, it runs how many seconds? Less than 3 seconds, 4 seconds. I get a combination result already. So all the results shows that, let's say for example, it has got profit factors that 2/2.17. The means the strategy is good because the profit factor is actually 2 times that you make and you lose 1 time. So, but of course this is actually overall. But if you pick certain stocks, they have much better performance compared to some stocks. Of course, you lose some, but you also make some, and then you will have chance to see them in chart how this thing performs. Okay, so this is the benefit of using this software, which you can do so many different strategy, and you get the result you wanted. In fact, the good thing is you will get a lot of important figures. You see, you're not going to make money every single day using a this is not good strategy. This is the very simple strategy, MACD. Everybody knows this system. So I'm just telling you, by using a MACD alone in stocks, okay, pick the stock that especially that you know, and backtest using this simple MACD. It actually gives me the confidence MACD works, because overall, the worst case scenario, you combine the good stock, bad stock, blue chips, mid cap, and flash or small cap stocks, it still gives me the overall 2.17 performance factors, which mean the profit factor of 2/1. So that means yeah, it should be making money kind of strategy in long run. But if everybody know this strategy, so is the strategy still make money? It could, you know, because everybody know this strategy, but not everybody can stick to the rules, the risk, the cut loss 1% kind of thing, in the rules that you define. That means today I've covered you how to build a simple strategy, break 20 bar using MACD. Everybody has MACD, right? And then stochastics. All this strategy actually can give you. I didn't combine them all together. Okay, I'm just using one strategy at one time. And if you can shortlist with filter with the fundamental available, which is much better. If you don't, just apply the risk money management system into your trading, then you will have a positive result. Because I have tested all this strategy. You probably should test yourself so that it gives you the confidence. And all this kind of strategy actually give a very positive result, which in long run you should make money. But what if it doesn't? Usually it doesn't because you don't follow the rules. For example, when the market is not in a good term, so you don't get a good signal. So but you need to go in also, or you have a you have some position, but suddenly the market turns sour, and you're not actually willing to cut loss. That is the point. And usually over trading also one killer, which you trade the positions that bigger than you should do. Now this is almost I concluded all the topics I need to cover today, but I also probably will be encourage you to test out all these ideas, and also think how you actually can hedge the position if you are in, whether you're hedging by using futures or using short selling of stocks. You have to really, like, in long run, you need some strategy that can help you to have all this in place. So with this, actually, I concluded tonight, and probably we can actually go to Q&A station, Q&A session, so that we can take some answer, you know, or explain further that things that you need me to explain further.
Okay, so we'll start the Q&A session now. So for the first question, does it mean once you have the buy signal, this software will queue to buy through your broker automatically?
Sorry, come again?
Does it mean once you have the buy signal, this
Uh-huh.
software will queue to buy through your broker automatically?
Okay. In order to have the full-fledged algorithmic trading facilities, you need to have the access, usually called API, application programming interface to your broker. So your broker may not support all the software available in the market. So
Mhm.
you need to consult your broker. So which software they actually can be used. The Ninja Trader, unfortunately, because the software that I can get this is actually from overseas. By default, they don't support local stocks. But I know some brokers have been supporting this Ninja Trader before. But if you need to automatic trading it, there's not many choices yet in
Mhm.
Malaysia, but there are people already providing solutions, and some brokers are providing the API, which you can actually call the buy and sell signal by Excel or using this software. But you need to program the we call API before you can actually do it. So, but if you don't do that, backtest, but using manual trading as one of your temporary solution is actually totally fine because some of my trade and in fact that even I part orders, but some of trade I actually because I'm still pretty much a discretionary trader, so I will use manual trading as my primary. And because I also trade futures, so that's why the futures trading part, there are more options available. But in futures, in stocks, I'm sure there are some platform available soon or already providing you, but not this Ninja Trader that you can actually connect live and trade it. No.
Mhm. Okay. Okay. So for the next question, um, how much ROI generated by a strategy is considered a good strategy?
Okay, very good question. Um, the ROI is actually, I think everybody expect very high ROI. If you ask me, anything that can provide something from more than 10 to probably 20-25% is considered a very good
Mhm.
ROI per year for a capital that you test it. There are some people that actually can trade uh, and, and make in to look such a way you can generate more ROI. But usually that such system is a system that probably you overuse or over trading it. It
Mhm.
doesn't follow the risk management at all. And then you can have a ROI that probably 10% in a month. But just now I talk about 10 to 20, 25% in a year. But please bear in mind, trading is a long-term business because you want to make sure in long run you will still make money. So I would say just give you a brief idea. Um, if Warren Buffett is actually compounding and doing probably around 20% per year for the
Mhm.
past 50, 60 years. So you probably stick to the percent of, per annum, 20% will be a good strategy or very good strategy. And in fact, if you look at hedge funds or mutual fund performance from Malaysia, from overseas, actually any mutual fund or hedge fund, sometimes they are exceptional. They have probably 50% in a year time.
Mhm.
But if you take 10 years average, you don't see a very high number. If you take 10 years average, probably doing 10 to 15% is actually very good. But of course, hedge fund or mutual fund are very big fund, so they don't really need to eye on 20-30%. But yeah, give and take. So I'll say if you have a strategy that can give you probably 12 to 20 over percent,
Mhm.
is actually very good.
Okay. So it's usually 12 to 20% that's considered a good strategy
Yes.
already. Okay. Thank you. Okay. So for our next question, can we trade FCPO by algo trading using this Ninja Trader?
Um, Actually, yes, because it has been supporting this, but some of the brokers may actually take out this function. But as far as I know, NinjaTrader also support API, so you actually can fire a buy-sell signal by using this software. But I also aware some brokers actually removed this function probably a few years back, which you don't, because let's say for example, PAT system has been removed from Malaysia this year, so you don't have this access. But I am sure there are brokers that can use this software to trade the FCPO as well. But of course, there are a number of choices. To try another software called Trading Technology, and I know this software definitely supporting, you writing the algo and fire the trading signal. They are already production, and it can be work this way. Check with your broker. It's called TT, or Trading Technology. And so if your broker doesn't support the automatic trading by using this NinjaTrader, just use this NinjaTrader as the testing, because NinjaTrader has got more function in terms of testing. And like Trading Technology, they're more on writing the algo itself. So not much testing for you. So the reporting, all this part will be, because it's a live trading platform. So yeah, make use of two platforms. One is actually to fire orders, one just to do backtest, especially when you're just starting. You don't want to invest ton of thousand. We talk about US dollar in a system. Let's say trade navigators in our software, which is quite expensive to just start off. So you make use of this software to practice a bit before you go into a fully paid system.
Okay. Okay, so for our next question, if the company growth is negative, but if the indicator is buy, should we follow the indicator?
Okay, this is much on the preference and the statistic that you follows. Okay, in my case, I wouldn't go in, because I'm more like a investor type, which I want the company to be able to grow before I put my money into this counter. Of course, you can buy a ticket. Let's say, for example, a stock that potentially it will go up, but I would rather a company that can perform before I join this company.
Mm.
So because I have the mindset that these type of counters or stocks usually those will be interested by fund, by mutual fund, by fund managers, by general public. So at least the counter need to have a earning growth before it is considered a good trading or investment signal for myself. So I will follow the signal or backtest result or buy signal,
Mm.
but I need them to be in earnings growth as well.
Oh, okay. Okay, so for our next question, how do I avoid over optimization?
All right. Over optimize is a process. Okay. You almost run every parameters and optimize the parameters with a very big range. Okay. In order to get a very optimized result. Usually, if you spend probably too much time just optimizing, it's already optimized, because let's say, for example, my case, I've been running. Let's say sometimes you have a strategy that probably need 5 or 10 parameters, including the profit target, the stop loss, and the indicator parameters and all this. If all these you put in the back test and combine them together, you realize you probably spend weeks or days to get a result. Most probably you're all optimizing. I have done that before. Now I don't trust this anymore. So what I do is usually I will pick those conventional parameters. Let's say, for example, MACD. I don't bother to change the parameters 12 days, 25, 26 days. I just stick to the default parameters. I probably tweak a bit on the probably risk, let's say 1%, 2%. But to me, because I've been so used to this 1% trading risk management, so I will usually wouldn't even touch the 1%. So I just test how many percent profit target is actually good, so that I'll test from 5% to probably 25%, so I test one by one.
Mm-hmm.
So from there, I feel like the system is actually developed enough. But if you actually start to look at thousands of parameters, combination tens of thousands, because you have 500, a combination is hundreds of indicators or parameters to test, and you probably think yourself, you get yourself to be testing so many data, and you're probably over optimized. And sometimes you have, let's say, 10 years data, you test all the 10 years data, so you probably also over optimize the system as well. So try to not over optimizing by simply sometimes just put the parameters that you don't want to optimize. Just put the figures that you wanted. Just place there, and then if you know how to test Monte Carlo stress test, so you just stress test it, see whether this system, if you don't over optimize, will it lose money? Sometimes a good system, you just run a normal parameters and you do a Monte Carlo test, it won't lose money because it's simply a good system. It won't lose money, but it may not give a good result. Or if it does lose money, it doesn't lose a lot of money. So
Mm-hmm.
this system is actually good enough to go, because it's very hard just for probably a retailer starter, okay, to get a perfect system from scratch. Probably you do not have the manpower, the data, the resource, the skill to test everything. So go for something that very conventional. Don't over optimize, by make sure the time that you spend testing the parameters that you're testing or optimizing the numbers, don't use too many. Probably you're optimizing three, four parameters is okay. Optimizing involve 10, you are over optimizing. And the testing period take too long to complete, usually also means that you're over optimizing, because you're testing all the condition there, because once you over optimize, you will fit into a curve. So that is curve fitting. So
Mm-hmm.
yeah, these are the few hints to look for, not over optimizing.
Okay. So for our next question, how to know a good backtest strategy is no longer good anymore?
Okay, the simplest way to tell yourself is plot your equity curve. That means once you start trading, or be it a paper trading, every single trade or every single day, okay, if you're using the same strategy in the same account, put in the number or the figure that how much money in your account. Let's say you start with 10,000, you make money, let's say 10,100, you lose money 10,000, then 9,900. So you keep all these figures. So once you see the this we call equity curve. Once you see a very bad equity curve, means you start making money, but then eventually it draw down. So once you lose money, and usually if you draw down, let's say 5-10%,
Mm-hmm.
you consider something is wrong with the strategy. You can also put a moving averages to your equity curve, which to test whether your system is actually out of alignment, or the market doesn't suit this kind of strategy anymore, or something is wrong, very wrong in the beginning, or over optimized. Yeah, using the equity, let's say simplest one is actually draw down 10%. That means if you have account at 100,000, it lose 10% to 90,000, the strategy is wrong. Or you use a plot an equity curve and use a moving average for, or let's say 10 days. That means it drop below 10 days equity, you start thinking this strategy may be wrong already.
Okay. Okay. So for our next question will be, what is the fundamental apps that you showed just now, the one with the Mandarin characters?
Oh, okay. This is a software I actually wrote for myself a couple of years ago. So the good thing is, because sometimes I might not have enough time for me to go through all this day in day out, because I'm full-time trading. I'm trading quite a number of things.
Mm-hmm.
So usually I'll just let the software scan through all the break 20 bar new high counters, and then I'll click on discount, the counter that filtered to me, and then I'll check on all the earnings, you know, and so on and so forth. So I'll only look for these three parameters here, which that meet the criteria of, you know, what I told you before, and that's how I actually pick this stock up. So the software have been selling for past 20 years, but of course because now we are actually a prop shop, which we are more on a trading company, proprietary trading company. Yeah, but I'm sure you can get this data and software, or you can visit my website to probably check out the software itself. But yeah, as I said, it's the information is actually freely available from even Bursa Malaysia Marketplace website, which is very informative, and yeah, you should actually check out this all the time.
Okay. So our next question, which program or system can I use to define the stocks above 20 bar?
Okay. I think most of the system has this nowadays. The Ninja, you can write your software. The software that I wrote for myself, it called WinChart. It also has this function in default. Bursa Station has got this function to filter breaking 20 bar new high. Yeah, if it's not available, so a very simple one will be you test with, let's say, a moving average of, let's say, 50 days, 30 days. It will almost like similarly give you a very similar result as well. So I'm sure most of the filtering has this function now. I'm sure that the one that you're using has this as well.
Okay. Then we move on to our next question. If my capital is small, like 10,000, 1% risk seems to be too small to trade. Can I increase the
Yes.
risk?
Answer is no. Okay. It's so much easy for a trader. I started just like everyone before. You have a small capital. You think that okay, 1% is actually not a good return that I wanted. I cannot go full time. Yes, this is very true. Um, then can I risk more? But there is the formula to failure, you know. So I really don't want everyone to repeat what I've gone through. Stick to it. The 1% is actually important there for a reason. Uh, there's no shiny day every day. It's bound to be a rainy day, thunderstorm. So the 1% will help you during thunderstorm time, but during good time, yes, the 1% will limit your profit. But put it this way, um, in the normal days, okay, the one that make most money is the one that don't don't follow the rules. Okay, don't have risk control. They go all in. They make the most money.
Mhm.
But once thunderstorm, you know, they have everything, you know, give back to the market. But the one who follow rules will just stays, good day, bad day, and this is how you build up the confidence, you build up the capital yourself. But let's say, for example, I just give you an example.
Mm.
If you're able to generate 1%, even from 100 ringgit or 1,000 or 10,000 account, you're able to generate this result consistently for 1 year. Shows this to any firm, any investment related company. I'm sure they'll be more than happy to hire you or to take your advice, or yeah, or even if you're so confident, you can actually take up even, you know, uh, I don't know, money extra from your saving or whatever to be starting and invest. So I always believe in this. So yeah, it's always a chicken and egg thing, whether I should get a bigger capital first, or should I actually get a very good strategy first. The answer is that not chicken and egg. You can start with a big capital because probably you sell your property, you put on a mortgage, you know, or you actually inherited a big fortune. You can start with tens of millions,
Mhm.
but you can actually lose all these assets. But if you start with a good strategy, good mindset, good traders behavior, if you can go for a long way, you can start with 10,000, 20,000, but you can actually eventually become a very, very big or good trader, which managing, tens of millions. That's not impossible.
Mm-hmm. Okay. So for our next question, what are the maximum number of indicators should I put on the chart that you prefer?
My answer, short one, is one. Don't use too many indicator. I always like to only use one. If sometimes I don't use indicator, also can. For the instrument, sometimes I'm trading. I don't even use indicator. I'm just merely using what we call we tape reading. That means read the prices. Will be enough. In this example, I do have my preference of how many indicators I use. Normally, I'm just using moving average one and the volume. That's all. If you have, let's say, access to real time codes, which you can use volume weighted average VMA, which is also good. Usually intraday is better. IVWAP. So yeah, you don't need so many indicators. For backtesting, as I said, MACD effectively is actually good enough. Stochastic one is enough. So and then often or not, I'm just rely on candlestick.
Mm-hmm.
So let's say I'm able to read candlestick because I'm still used to candlestick. So the chart type I'm using now is actually Heiken Aishi candlestick. It's actually give you green bar is going up, red bar is going down. So I'm reading this kind of simple indicator. Honestly speaking, although I'm really trading full time for a number of years, but the indicators that I'm using are, I think, sometimes too simple. No one want to believe. But yes, I don't have a very complex indicator. Moving average is already very complex to me and good enough. So often or not, I'm just reading the price alone. Uh, then I can start trading already. So tape reading, which is the number of buying lots and selling lots, is also because these are intraday. So you need to also learn how to do it, because if you want to trade intraday. Otherwise, if you want to do swing trading or percent trading, just look at candlestick enough, because the green bar is up, the red bar is down. That's all. But of course, you need pick up some experience and then jot down all the records to show to you. You have the confidence. Let's say, to trade a signal. Okay, every time you go in this way, you buy, you make money. But can I ask you how many times you make money using this method? How many times you lose money using this method? Do you have that information? I can tell you, I have this. I
Mm-hmm.
have recorded all my trades from day one to now. Every day I still record all the trades I've been doing, and I have all the records showing me how many percent that I go in this way, I make money. How many percent I go in this way, I lose money.
Mm-hmm.
So yes, it's actually critical and important if you do all the records for yourself.
Oh, okay. Okay. Then move on to the next question. Trends change, macroeconomic situations change. So do we need to change strategies from time to time?
Mm, Actually, yes, you need to fine tune. You have to define a few things. Let's say, that's why you need to do records often, because let's say you can check. Okay, if the overall market is actually bad, the macro is actually bad or not favor to the market, what will happen to the stocks in the behavior of the stocks? So once you know this kind of thing, actually they actually has got a fixed pattern. The cycle has got a fixed a cycle as well. So this kind of thing you have to, let's say, every 4 years elections in US, what is the potential behavior? And every 5 years there will be election in Malaysia. What is the behavior of these counters on? Yeah, you you need to change strategy. If you do not know the pattern, but you know something going on, so my advice is actually don't trade, because bank on, let's say for example, every time in our election, they'll bank which which side will win, and they go a long side or short side. So actually, you're just gambling. You're not trading at all. So are you sure you are actually trading with this kind of method? So normally, I'll ask myself one question. I have a lot of students that my own traders that also ask me this question. They want to go in a view. They say, oh, this I see a lot of people sell. Can I sell? Or I want to sell 100 lots. Can I do that? Or I want to sell 1,000 lots stocks. Can I do that? So I always ask a question. Are you know for sure the counter can go down or can go up based on your analysis? If you know it for sure, you can go in all in. Okay. If you do not know it, okay, and you have a only gut feeling, this may happen, you actually just gambling. So are we gambling? No, we are actually trading, we are actually investing. So there's nothing that you know for sure in trading. So every step that I take, I actually very careful. I make sure that I'm not subject to gambling. I'm not gambling. I don't know this thing for sure, so I go in very carefully because I don't know it for sure. So I'll make sure the position that I go in is not that big, because once I lose money, I don't lose a lot of money. Of course, in return, you to make a lot of money also out of one single trade. But yeah, this is how we do, because we do a very small trade, but very frequently we do accumulate some sizes before we probably take profit. But yeah, you need to consider everything before you go into one single trade.
Mm-hmm. Okay. So we go on to our next question. If you enter a counter and it goes sideways, floating above your stop loss, do you set a time frame before jumping counter?
Uh, Actually, if there's a stop order trigger, let's say it dropped below 1% of your stop, you should actually just stop exit. But sometimes the sideways is actually very torturing, because it may be that is the correct signal, but the day before you I mean the day after you exited the stop, the price go up. So I will say just um I won't really put a time frame, but unless this is really torturing, like every other counter is actually moving except this, and this is not look good. If I'm stopped, I mean keeping it, I'll actually exit this. I used to intraday trading. I used to have a timer on hand. That means if I go in a position, that this position doesn't go into my favor in how many minutes I will sell. But I don't practice this anymore. The reason is because now I go in much more confident, so that I don't need the time exit. But there is a time exit that you may consider. But in my trading, I probably not the best person to answer you how long you should hold before you actually exit. But rule of thumb is, if you feel like you don't like this counter anymore, even you're not losing money, but you're not making money either, exit it. Because if you do the filtering, every day you will see a new counter emerge. And if 100,000, you actually invested all the 100,000 on 10 stocks, and the number 11 stock comes out. So probably it's probably use this guideline as a good point for you to cut the one that is in sideways, it's not productive anymore. Your money is actually stuck and not productive. Just cut that, or probably scratch the trades and take out the money and invest in the new stocks.
Okay. Okay, so for our next question, um, how do I import or subscribe to Bursa data for Ninja Trader?
All right. Very good question. Thanks for asking also. Okay. There are a number of providers in the market actually that give you data. First, of course, you can key in yourself. I think Bursa Station, for example, do export data. You can download their historical data, but probably you need to do some fine adjustment. But the Ninja Trader is actually quite smart. They can import daily minutes to you. So if you have, let's say, Bursa Station or Dazihui or Nextview, this kind of real-time data, they're actually able to export data. Okay, but you may need to adjust the format a bit. Okay, and then you can import into your Ninja Trader. So this one probably you need some helps from the people that know Excel or knows a bit of programming, that can easily convert this data for you. So yeah, it's actually you can do it. You need to a bit of conversion. Yeah.
Okay, so then now we just proceed to our last question. What record parameters do you suggest to keep?
Record parameters.
Mm-hmm.
Record parameters. If you talk about what I spoke about my records is, let's say for example, if your trading stocks are using MACD strategy, so you're went in this price, you exit at this price, you need to record and how much money that you make. So what kind of statistic you want to come out from this is first thing. I mean, the backtest actually gives you all these statistics, but you need to keep the statistics in your real trading as well. So what you do is you record, let's say, your entry price, and then your exit price, your profit, and then after, let's say, months of trading, then you can get back your records and plot your winning ratio. That means how many trades you go in, how many numbers are winning. So you get the numbers of, let's say your winning ratio is 65%, 75%, 85%. If your winning ratio is actually 45%, then you need to calculate your expectancy, whether you're actually making money. Sometimes you can have a 50% strategy. That means 5 trades out of 10 is actually making money and 5 trades out of them are losing money. You can still make money because you make more than you're losing. So these are the parameters eventually that helps you to have the confidence. Let's say if I ask you, what is your winning percent? So you say, okay, in the testing, it shows 80% winning. But in actual execution by myself, it only shows 65%, but I'm still make money. So that is perfectly okay. But if your strategy that make 80% of the time in the backtest, and then you lose 80% in actual trading. So what is wrong? So maybe slippage. That means you enter, but you didn't get the price that you wanted, and the price actually fly already. So you had to fine tune this. Then you find the result. But the most important is actually the winning ratio. And then once you have the back test and the actual test, either it's paper trading or what. Okay, I just call this a forward test, paper trading or actual trading. Then compare the result. The back test you can continue to run the back test. Okay, then during the live trading, the live trading and the test result, they should actually same record. That means I've been back test for the past 10 years. Okay, but I'm testing for 3 months live trading. So you use your live record to record, but your software back test also can still test the last 3 months, these 3 months. Okay, and see whether the result is tally. If the result tally, then you should actually make money like your backtest. Otherwise, it could be your execution problem, or it could be the price that you get is actually not what you get. So then you realize another parameter very important is actually slippage. Whenever you buy and sell something, there will be a slippage. The slippage is the price that you want may not be filled. So you have maybe 1-2 ticks, slippage. So these are the things that you also need to overcome. Or sometimes you realize that every time the price actually is just correct, the signal is just correct, but you just wouldn't be able to hit the bid and take the offer like you're supposed to do. So yes, then with all these records, hopefully you will be build up the confidence. Okay, and also if possible, how much money you'll be utilized in this particular trade will actually show the result. And then you will realize when you risk it most, that is the time that you lose most. But if you risk the minimum money and you have the consistency, and that's how you make money in long run.
Okay. Okay, so thank you so much, Mr. CC Yong. Okay,
Welcome.
before I take back the presentation, can you please share your website address that you mentioned earlier?
Oh, sure. Okay. This is my website and the email.
So it's info@straightindex.com. Thank you.